You guys don't care. All right. So that's going.
See you.
I know, I see you.
Not.
Okay. All right. So we still kind of stuck in this little range right here. And we did reach our order block. We took out this high, we reached the order block, and now we're kind of sitting right here, ranging in between this old high and this order block, right? And this little area right here that I'm referring to is this little range that we traded in last week, right? So what's important about this one is there was an area of imbalance that got filled on this daily chart from here to here. Let me get the point going. So this little area right here at this low and this high make up the imbalance. And we traded back down and kind of held in this little range in between this area. And we have this new area of imbalance below. So what I'm thinking is we come down into this area right here and feel this imbalance, or we go and take these highs out. We in like a 50-50 area where it could go up or down. We can see it comes directly from this area, open up, and go down into this imbalance area right here. Or we can see it open up from this area and push up into this imbalance that's on the higher time frame, from a higher point here, and take out these equal highs right here. So we kind of at a area where it could go both ways. And seeing it on NAS, also in a similar situation over here too. So let me show you on this one. We don't need these things. We don't need this. We don't need this. Go to the daily. Right? There's our order block right here from the higher time frame, from the daily. We reached the low of it already here. At this point, we reached the low. And then there's our imbalance that we feel we came halfway into it on this one, where we got 50% of it. Right here. And we reached about 50% right where these bodies are right here. So that's kind of letting you know that this area is significant. So, and we pretty much ranged in between this for the entire week. So for those 5 days of trading, we only had just back and forth. So that our area will need to consider if we're gonna go down is this area of imbalance right here. Where's your low right here? And this is your high of the imbalance. This will be one area we look for it to price to come down to in between this area. If we go up, we come further into this order block right here, since we already tapped it once. It's drawn up. And that'll be pretty much, we pretty much kind of stuck in the range. And now going into next week, let's see what we have to consider. We just finished up our NFP week, and we pretty much didn't do much at all as far as getting any real movement.
Hey, Corey, get your charger.
Oh, hold on. Thank you. What's up? What's up? Hurt?
No.
Okay.
No.
Okay. All right. Anybody on here for the first time? Anybody on here for the first time?
No.
I am.
Who is that? Oh, Raphael. What's up, man? So normally my niece ain't here with me, so don't take this as like a regular situation.
All good. It's all good.
All right. So let's look at the next week. We got bank holidays for China, Euro markets. No red folders on Monday. We got AUD red folder news. CAD. This is a yellow folder, but we may need to take note on this trade balance, because right now, what's moving the market right now is our economic news in relation to trade, in relation to PMI, manufacturing news, supply news, that kind of stuff is what's moving the market right now. So even though this is a yellow folder, I want you guys to take note of this 8:30 trade balance release and look for it, look for the swing, whether it's positive or negative in relation to it. So actual number. So here you can see the effect of it. Actual number greater than forecast is good for the currency, right? But in this case, normally we would not really pay attention to this because it's a yellow folder, but I want you guys to keep an eye on that, right? That's the only thing for Tuesday. And our 8:30 news cycle is usually one that we need to pay attention to. Consumer credit, also another thing that we need to pay attention to. What's happened because of what's been going on with inflation and stuff like that. A lot of people have borrowed money and they're having a hard time paying it back right now. So this consumer credit, though it is a yellow folder as well, pay attention to this, because this gives you signs of sentiment of where Fed policy could move towards. Okay, so as they see, typically what the Feds will do is they use the sentiment of the market to determine how far they raise the rates, right? And things like consumer credit, trade balance, like I said, those are some of the signs that you could kind of use as like leading indicators into what they may or may not do during that time. So Wednesday, crude oil, home. So still not a lot of red folder news. Unemployment claims on Thursday. That'll be our biggest thing on Thursday. CPI. So CPI, this number is important. This number is important. As you can read it measures the price in goods and services. This is also one thing that the markets have been paying attention to as of late. Is again giving us a range of how they want to move with the inflation rates. So definitely pay attention to the CPI. I can go back and show you some of the effects of how they've been paying attention to this in a second. PMI, Yeah. PMI and CPI are both ones you want to pay attention to. And then on that same Friday, federal budget balance also is yellow, but pay attention to it because this is also one that it really should be a red folder right now. So really should be a red folder right now. So again, we got this little area that we could be coming to. That's our order block right here. Our range. If we go to the downside, we can look to target these areas right here. Not so much giving up a trade idea yet because I want to get more of an idea of where the market opens because we are we're really bearish right now. And for us to buy, we can't really buy unless we at a good area that is previously bought from. So you got to kind of pay attention to that. And then if you look at US 30, if you look at US 30, we got a similar look as well. Similar look for US 30. You notice how US 30, NAS, and SPX all kind of have a similar structure right now. They're all right at order blocks. They all have this little imbalance, right, that they've already traded into. This one's here to here. And then they all have an area of balance right below it. So we got a similar look for all three. Come here. Can I have a hug? Can I have a hug? You sure?
Cheese.
You want some cheese?
Yeah.
You gotta wait.
Maria.
You want some cheese?
Yeah.
Hold on 1 second. Hold on, guy.
Happy social time.
That apple juice is gone. Here you go. So who's like 2 or 3-year-old says no to everything? This little kid says no to every single thing right now.
All the way up to age 5 and 6.
Really?
That's their favorite word.
It is, right? It
Yeah.
is.
Yes, it is.
It is her favorite word.
That's facts.
I spent like I was late because I was trying to make her eat. And she kept saying she want to go outside. And she wouldn't eat any of the food. So I spent like 30 minutes sitting there with her just to try to make her eat. So, and she got mad and she didn't want to eat any food because I wouldn't take her outside. And now she wants cheese and apple juice. So, all right. Look like she calmed down now. Okay. So sorry about this, guys. Sorry, everybody. You know, we don't have like a lot of older people in our family because you know, we we don't have grandmas and granddads. So myself and my wife, we like the older people in our family. So we have to be like the helping out and stuff. So all right.
No, I know what you mean. I'm babysitting right now, but mine is sleep.
See,
All right.
see,
And I'm really the older person.
you are mistake.
I know it.
You
It's
are
my great grandson.
see. We got all right. So, like I said earlier, all of our indices are they got a similar look, right? These little equal highs right here, that's going to be a target. That's going to be where they draw, right? So the question is like, where are they looking to take the market based off of our areas of liquidity? Our areas of liquidity are these equal highs and this little area of imbalance right here. That's our closest areas right here. We got this order block and these equal highs, and then we have this area of imbalance. Those are our two. This is our bullish target. This is our bearish target. And depending on where they want to take the market, we know they have to go to these areas to fill this imbalance or take out this highs of liquidity. So that's why I say right now it's just kind of a 50-50 area. It's kind of a 50-50 place because they may want to take this liquidity out that's inside of this imbalance and then go up, or they might want to just drop it and take these lows out around here. We don't know yet. So we got to kind of play this by ear and just looking at coming next week. We don't have a lot of things that could drive us in one direction or another. So we may go into the rest of this month kind of being 50-50, a little fluctuation all in itself, right? So going into next week, all we had was major news on Friday and Thursday. So going into the openings of the week, it should be kind of a technical week unless we get some breaking news. Now, going into next week, however, what you guys will need to consider is that Amazon split. Amazon split is going to be a 20-1 split. And Amazon is one of the FANG stocks, right? So Amazon split is going to be on June 6th. And on June 6th, that's Monday, right? So that will be another day we can consider any of the huge moves, right? And again, like this is just a tip for you guys that may want to do some stock investing. This might be a good time for you to take a look at purchasing some Amazon stock as well. Let's look at Amazon on the chart.
Coco,
Yes,
DTVS.
you made a mess.
Yeah,
Yes, you did.
not good.
You made a mess.
Yeah.
You did. You made a mess. I'll get it up in a second.
Okay.
You can just leave it right there. All right.
Sure.
Yeah, you made a mess.
Yeah. Apple juice a bit.
Yeah, you waste the apple juice.
Yeah.
Mm-hmm. You waste it.
No cocoa.
Yeah,
It's a mess.
I'll clean it up in a second.
It's either.
Hmm?
It's either.
Okay.
Yeah, yeah. Oh,
All right.
you can make me that either.
So we can just
So,
look at this on a higher time frame. We don't even need to
Go.
go.
right.
We don't need to go into the lower time frames. Let's stick to the weekly.
Bing. It is not someone you know.
Can you go draw me a picture? Thank you.
No,
No?
I only got pizza.
Okay. All right. So
No,
here's where we are right now. We are at
Yeah.
24.47 for the week. They're gonna do the split at 20-1. So you basically can divide this 24 by 20. And then I think it gets you around 120 per share. And they're estimating that the cost for the opening should be right around 122. And at 122, you'd be purchasing a single share of Amazon. If you already have stock in Amazon, your single share divides into 20 different shares. That's basically what that means. And that's what's going to probably drive the market on the open on Monday morning. Even if you don't decide to buy initially, the price is going to still probably run up. You'll probably have an opportunity. But usually what the good thing about stock splits with companies that are staple stocks, where they ain't going nowhere. The staple stocks meaning that they're stocks that are going to be around and they're going to be strong even after the split. A stock like Amazon, even if they don't get back to 2,400 at any point, you should still at least get a 30 to 60% return on your investment, regardless, because those companies are not companies that are just going to split and then just fall off a cliff, So whether
Corey,
you
can I ask you something?
Yeah, go ahead.
What makes a company do the stock split?
Well, when you're a company that's reached a peak in your earning potential, and maybe that's one example. When you're a company that's trying to create new funds, you want to earn more money. One way you can do that is doing a stock split. Another reason is if you want to look into new ventures, if you want to do new products and you want to raise money, you do a stock split. Another reason is if you're a company that's in a bad situation and you're losing money and you want to gain some money, you do a stock split. So there's good and bad reasons to do a stock split. In this case, you can consider this a pretty good reason to do a stock split because Amazon is a strong company, but they want to tempt new investors into the market, right? So for them, this is a good thing. They want to be able to open up their product, their shares to new clients. So the way that they do that is they split it so they can increase a new retail traders to come in and buy the stock. Because right now, retail traders can't afford to buy Amazon because it's $2,400 a share. But if they split it, now someone like, someone like you or someone with a smaller size account can say, I couldn't buy it at $2,400, but I can buy it if it's $100. And now you're a new person to own Amazon. That's the same thing with institutional buyers, right? If institutional buyers were thinking like, man, I want to get in Amazon, but I'm not about to pay $2,400, but you will pay it when you get into a market where it's only $120 a share, right? Got it?
Yes, I got it.
Okay, cool.
Thank you.
I wanted to give you guys an example of a stock split. So who was the last big company to do a stock split?
Was it Apple?
Apple did a split. Apple did a split not too long ago.
Didn't Tesla split too?
Mm-hmm. We're gonna do a case study. Let's look at Tesla. I'll do a quick little case study. And last Tesla split. August 31st, 2020, right? Now, okay. When Tesla did their split, they did a 2-to-1 split. For example, okay, they did a 5-to-1 split. Okay. So Tesla before the split was trading at $1,000, right? They did the split around here, right? And let me see, August the 31st, 2021. So right around here. Right around here. If you had bought it when they did the split, the actual price that they sold the stock for on the split was $4.98. I don't have all the information in front of me, but you won't see it on the chart because it's already been updated. But the actual split price was at $4.98 per share, which would have put us around here when they did the split. So you can disregard all this stuff that's before this date, right? And just look at the 31st, right? So on the 31st, the stock split open at $4.98. I already know this, so if y'all looking at it like, why I don't show it on the chart, don't worry, trust me. So it was right around here. All we need to do is consider what happened from this point moving forward. So on August 31st, when it opened up at $4.98, the stock on that day opened up and pushed all the way up to a peak in November of 1243, right? Of 1243. And even if you didn't get out at 1243, you had another peak here at 1206 and another peak here at 1152. That would have gave you 2 times the money you had earned if you just bought one share. So, and even you buying it and you still holding it, you're at 703, you still doubled, you still 2x. Up here, you're 4x and 5x up here, but you would have already doubled your money, right? So if you are a person that's kind of skeptical, in most cases, when a stock does a good company anyway, a good company that does a split, which Amazon is, within that a year to 2 year time frame, you'll at least get 30 to 60% back of your initial investment. So it's, it sounds scary in a lot of cases, but when you do a purchase on a stock that's splitting for a company that's good, you can usually typically see those kind of gains where you get the 30 to 60% gains back on your investment. And Amazon is definitely going to be one of those companies. So, that's my stock advice to you guys.
Where can you buy it? Where can you buy the stock?
Well, a lot of you guys Forex brokers have Amazon on there. And you just have to look for it under the symbols. And then if you have a Robinhood account, if you have Robinhood or TD Ameritrade, Fidelity, you can buy it on any of those brokers. Yeah.
Yeah. So you can trade in Cash App. That's what I was gonna say. You can trade it on your broker when we marked it up, and then you can buy it on all those people he said, and Cash App.
Yeah, and Cash App too. I forgot that. The easiest for me, for you guys, I would say is Robinhood. It's easy to get your money in and out of there. It does take a couple days to let the bank balance go through and all that kind of stuff. But so if you think if you open up an account like this weekend and you're gonna try to hurry up and buy it on Monday, you kind of missed it already because it takes a couple days for the money to go through. So I would actually say, as far as, see, babe, as far as like trying to jump in at this point, if you don't have any money in there, I would say it's probably going to be a little too late for you to do that. But here's another option for you. There's usually, a period where you get what they call the froth. Like it runs up and then there's going to be a drop. That's going to be the initial people taking profit and sell off or whatever. Example of that is you saw the price run up around the open. It went up to this high, came down right here, and right here. And you would be looking for a drop in price at one of these points, and this would be your entry area. And then let's say you bought it here, you take it up to here, or you buy it here and you take it up to here. That would be your other option if you don't get the initial run, right? Yeah. So that's how you kind of want to play it if you can't get into it already, right? And I kind of take the approach of doing them both, right? I'll buy some on the initial, and I might take half of the profit out once it runs up to a high, and I'm either 2x, 3x, or 4x up. I'll take at least half the profit, and then I'll leave the rest of it in, and then just see where it goes from there. And if I get a significant dip into it, I'll add on to it later on at one of these points, like I showed you. And like I said, don't pay attention to the numbers or nothing like that. I'm just using Tesla as an example. So, maybe you take an opportunity to buy at one of these points. And then once you take this initial run up here, you maybe take half off of that position. You get some in here. This one didn't run up. That's okay, but you still got additional shares. You buy some here, additional shares. You still have entry up here at the beginning, here, and then you take another 4 times off your position up when it runs up here. And that's kind of how And that's called a scale-in approach, you know, where you don't take everything and put it in right here at the beginning, because you know it's gonna run up and you know there's gonna be room for it to come down. So you just scale in, you put a piece of it in here, a piece of it in there. Here's an approach that I can give you that I've talked about before. All right, so let's say total investment on the stock that you want to spend is going to be $1,000, right? And 1,000, right? The example stock is now trading at $1 per share, right? All right, so current price $1 a share. We're gonna take this $1,000 investment and divide it into 4. So each time we do a purchase, we're gonna do $250 per buy limit. Yes. Yes. What's wrong? Okay. Per buy limit. So that gives us 4 opportunities to buy with that $1,000, right? And let's say on the first run, our first initial $250, we let the price go 4x. So that means that once the price goes up 4x, we're at $4 per share, right? So now prices moved up. Prices moved up and we've already 4x'd our initial investment, right? And that means that we would now be $1,000 up total, right? And for you as an investor, you can say, I'm gonna take off half of that, right? And I'll at least take my initial investment off. So that means I would have gains sitting at $250. I mean, $750. I take my initial 250 out, right? And just leave the money that I have made off of it in this stock, right? And just let that do whatever it's going to do. Or let's say you took 50% of that out, right? That's up to you. But let's just say we did one or the other, right? You take that off and you profit. You just profited $500, let's say, already. Now, your initial investment, right? You can take the opportunity to go back into the stock when you see it dip again at one of those other times, right? So you see it dip. Let's say we're using these dips as an example. You got this dip here. This is pretty much a 2x move right here. So whatever you would have put in on after you add your next piece in, you're looking at another $250 buy limit. And you just 2x that. So now you at $500 off of this investment already. So now you decide, all right, do I take the profit or not? If you decide to take the profit, you're looking at something around $250 you just made off of this if you don't take the whole thing out. And as you build that in to over a certain period of time, you will have a substantial size trading position on the stock. And if you at that point, not only are you making the residuals coming in off of what you, not only are you making the money coming in off of what you invested, but you also, after a time, become a dividend. You get paid out dividends. So you're making money off of the money that you invested in, and then you also become a shareholder, and now you're making money off of the dividends that the company pays out every quarter or every month, depending on how the company is done. So, and you guys will have the opportunity to take advantage of this when Amazon opens up. So this is just some investment advice for you guys. So I know this ain't got nothing to do with the charts, but I hope that y'all kind of understand what I'm saying.
Yep, it's all relative. Thank you.
Okay. Yeah. The baby kind of throwing me off today. So I'm sorry.
I was secretly hoping that you talked about it anyway.
Okay.
Yeah.
All right, cool. And like I said, the approach that I'm going to take is going to be this scaling into my position. I'm not going in initially with a full size of my investment. And I'll explain to you why, because when it opens up on Monday, I hate to say it, but we won't probably be able to get in at 120. By the time we're able to trade it, it will probably have already ran up significantly. Because
Even if we stay woke, like even if we stay up all
it don't
night,
matter.
dang.
It don't matter. You can put in a buy limit, a buy stop. By the time we're able to trade it, the larger funds will already have it ran up, so so that way, it's really no choice. We don't really have the advantage to get in as early as the opening price. And because of that, it's not advantageous for you to just throw everything in, because we don't know how high it'll run up on the initial run.
So let me ask you this. So when Google does their split, right? And I know I'm way off here, but when Google does their split, how do I make sure that I get in early enough? Like, how can I prepare now to get in for that split?
You buy Google at whatever price it is right now.
Okay. Well,
that's the only way. It's really the only way.
Okay.
Because if you want to get in early, you say, because you getting in early is saying that I want to get in at the lowest price when it splits. So that means I have to buy the stock at the current price and then let them split my stock.
So buying partials of the whole stock isn't a good idea.
Yeah, that's fine too.
Okay.
That's fine too. And there's plenty of ways you can do that with some of the brokers that I mentioned. You can buy partial shares.
Hey, Corey, can I say something?
Yeah.
Okay, guys. So we have to remember what game we're playing. I think a lot of people are excited, which I'm happy that we're excited about investing, but also remember what game you're playing, right? You have some people who are coming into the market who have, 10 grand to just throw in, and they're expecting that 30 to 60% return, like Corey said earlier. We are not those people. I'm sorry. I'm not speaking for everybody on this call, but I'm just saying as a whole, I'm using Amazon to my advantage of retirement purposes and percentage increase. So it's not so much as the price you get in as far as the position in the market where you get in to where it's going to increase from that price. Meaning that his position that he put in at, let me see if I can annotate real quick. He scaled, let's see. Okay, so remember he said he scaled them in. So he had 250 here, 250 here, and 250 here. If you grab the measuring tool, really you get in the price when it bounces back down, you have the greater chance of percentage increase. Remember, this is why we loved crypto so much, because crypto gave everybody an opportunity to be able to invest because you were able to buy partials of those shares of the crypto, right? Or those coins. So don't get caught up in what price and where am I going to already have your game plan of what you want to make, what return you want to make, when you want to jump out of the market, and what is your ultimate goal. My ultimate goal is to use Amazon as one of the leading factors of my retirement portfolio, because I'll be able to buy, I'll be able to acquire more shares, and it has a greater chance of increase. Now, if y'all come to my classes, we talked about this and we talk about this type of stuff. You know, I had to plug my class, Corey. I'm sorry. But that is, I don't want us to get all caught up in the hype, because that's what they're doing. They're doing a lot of hype right now. And what's going to happen, like just like Corey said, they're going to move it, pump it all the way up and pump it all the way down. If you have money, it is the best way for an investor to gain interest. And remember, we're talking about percentage interest increase, excuse me, is to average in. That is why investing is such a powerful thing, because it gives you an advantage to where when the market is going down, you're able to acquire more shares. And then when it goes back up, now you have a greater percent increase. Thank you, Corey. That's all I wanted to say.
Yeah, no problem. One of the things Christine just mentioned too is retirement, right? Why this is important. This is how you build a portfolio right here, right? Warren Buffett, I'm gonna show y'all something too. Let me show y'all something. I was just talking to Wale about this. So, this is something I want y'all to pay attention to. This is on CNBC. Take a look at this. Man, wait, there we go. This is Berkshire Hathaway's portfolio tracker, right? And what's interesting about this is we can see the percentage of their portfolio and their stake in each of the companies they own, right? And why this is important is because you have to understand that the companies that these people own, they own them for a reason. They own them for their long-term outlooks and not their short-term outlooks. Activision is one that they're just looking at their first company, Activision, right? They own 9% of that company. $5.7 billion is invested in that company, and this makes up 1.7% of their portfolio, right? They don't want this stock to go down. They don't want this stock to go down. And then let's take another look at this. This is their largest position in their entire portfolio. What stock is this? This is Apple. They have a 5.6% interest, a 5.6% stake in this company. This stock ain't going down. 12%, they own 12.8% of Bank of America. That's 10% of their portfolio. It ain't going down. They own 0.1% of Amazon. They have $1 billion invested in Amazon. And it's not even their largest sized position. So you got to think about this kind of stuff when you're looking at companies to invest in, right? Let's go through the value of their positions, right? And just think about this. We're just looking at Berkshire Hathaway. That's Warren Buffett's company. But what about traders like Paul Tudor Jones? We can actually see his portfolio. We can look at some of the senators' portfolios and see what they own too. But we won't go into all that, but just looking at what Berkshire Hathaway's positions are right now, they have $132 billion invested in Apple, $37 billion invested into Bank of America. Chevron, $28 billion, 25 in Coca-Cola, 11 in Kraft Heinz, right? A petroleum company at 10 billion. We want to know, like, ask yourself right now, why do we still hear about Sirius Radio? There's nobody that listen to it. You know why? Because guess who owns 19% of that, 20% of this? That's why we still hear about it. Nobody is listening to Sirius Radio. But when you got a company or a person investing into it like Warren Buffett, you going to still hear about it, right? What else? 344 total invested in this. That's crazy. Anyway, I'm gonna send y'all the link to this. If you want to build your portfolio, follow what Buffett do. Follow what Buffett's doing.
Was that 344 trillion?
Yep.
That's what I was saying.
Wow. Wow.
Follow what these people doing, man.
And this is on CNBC.
I just sent you the link.
Oh, awesome. Thank you.
Sent you the link.
It's going to be my cheat sheet. One of them.
Cheat sheet. Yep. Yes, definitely use this. You can see and like pay attention to the stake. That the stake is the percentage in the company that they own. Meaning, if they want to and they own a larger size stake in the company, they actually have decision power. If they own, like, you know, I don't know what percentage each of these companies use as leverage to determine who can make decisions, right? I don't know what that is. But typically, if you own more than 5%, 10% of a company, what you say makes a difference. So if they're like actually on the boards of companies, when you own more than typically 5% or more, right? And if you look at the stakes right now, you look at American Express, they own 20%. They own 9% of Activision. They own 5% of Apple. They own 12% of Bank of America. Bank of New York, they own 9%. One company that they own a large share of is whatever it is, DaVita is. They own 38% of it. So HP, Kraft, Sirius Radio, like I mentioned before, Moody's Corporation. Okay, dialysis. Okay. Whatever. Oh, this is a petroleum company. Okay, thank you. Thank you. She's upstairs.
Corey,
Yes.
the DaVita is Dialysis Lab Reports Health Records.
Okay.
That company is. So that makes sense.
Okay. And aside from the stake, then you need to look at the percentage of the portfolio. These make up the whole of their portfolio, right? And Apple is the largest. With some of the smaller shares, they don't even add up to 0%, but they probably own a larger stake in those companies. I don't know how they have it divided, but you know, yeah, I don't see any pattern. Yeah, another tip that I would give you guys too is if you want to use Berkshires as a portfolio, lead for you guys. Take a look at some of their lower price companies. I wouldn't probably look at Sirius, but like this Liberty, that's only $9 a share. This one's Stone Company is only $11 a share. Let's see if we can see when they invested into those companies. Let's look at that. Stone. Let's look at that. Okay, Stone. And then we're gonna go to Yahoo Finance. When you are doing stock research, I suggest you like really follow Yahoo Finance. Yahoo Finance is clutch for stock. Why didn't that go to it? That's weird. Hey, mama.
No, but it on the man.
Can I have a hug?
Yeah.
Thank you. All right. So when you go to the stocks, right? You on Yahoo Finance, you can put this stock ticker in, and it's gonna bring up this summary page, right? What I'm gonna show you is where you can find who the holders are under the holders column, and we can see Berkshire Hathaway here. Another people, Capital Research Global, they own a large percent. They own 4.98%. And the date reported that they made this purchase, I'm not sure if this is the date that they made the purchase or just the last date that it was updated. That I'm not sure. Can we see that information here? No. Let's see historical data. Is it gonna show it? No, it's not gonna show it here either. I don't even know why I looked at that. We could probably, I could probably say that if we dig down into these news articles right here on the summary page, we could find out when Berkshire purchased it. And I say that because if it is a newer purchase, that gives you incentive to say if they're buying it and it's a newer purchase, they probably know something that's about to happen, or they have a feeling or some kind of intuition to say that I have just recently purchased this stake into this company. So if Berkshire Hathaway is doing it, it's probably a good idea that I should probably do that as well. That's kind of the goal of where I was going with this. So
Can I add one more
probably,
thing?
what's that?
I said, can I add one more thing?
Yeah.
May you drop us that link of Berkshire Hathaway's holdings? And they didn't invest those billions necessarily, guys. That's when you see those market orders and that liquidity that Corey was teaching us about. That's when you see them holding those orders to push the market back down in that direction and come and scoop up those stocks at a cheaper price. So if you see certain stocks going down, because Berkshire Hathaway is actually down right now. They've been down for 3 months. But sometimes the market, well, a lot of times the market going down is good because you're getting that stock at a cheap price. And then when it goes back up, now you have a portfolio that has tripled and doubled, but you never had to put that amount of money in it. So it's okay if the market goes down, guys. Don't be panicking.
That's what they want.
Yep.
They want the price of the stocks to go down. Like for them, hearing recessions means that I know y'all heard me talk about Fashion Nova all the time. I always relate that to the women on here. And discount double checks. That's what they be doing, right? They be putting the market on discount double checks and Fashion Nova discounts all the time. When we go back and look at the charts, right? Looking at this chart right here, this stock was 46. It bought at 17. This was the Fashion Nova sale right here. This was the Aaron Rodgers discount double check right here. And Berkshire Hathaway is looking at the same thing. They're saying, all right, this is a beat down stock. They trust that it should go up at least halfway from where this drop was. And they're coming in at $11. So they don't care if they didn't get in at $9 and $6 where it was down here. They're okay with saying $11 because they're looking at price targets at $49 and $33. That's where they're looking at. And if we throw the fibs on, let's just throw the fibs on so you can see that too. From all-time high to where they just bought at $11, right? They bought at 11 and some change, right? A 50% return on this is for them a 363% gain. Even if it just goes 50%. If it doesn't make it to that point, and let's just say it goes to $30 a share, that's still 180% return. That's what they're looking for. So they don't care about the fact that they didn't catch the bottom at $6. All they're looking at is that this stock is beat down right now. They trust that the company will regain its value at least to 50% or a partial of that. And if I get in at $11 and I push it up to at least $30, which is, what is this? Our imbalance right here. Even if I just feel this imbalance right here, I still made 155. If I don't feel the whole imbalance and I just come up to the low of the imbalance, I made 50% of my return. If I come to 50% of the imbalance, I made 100% of my return. That's all they want to see. They don't care about all that. They don't care about all that. So today was a stock class today.
And it was amazing. Absolutely amazing.
Really was. This context, putting things in context, this was amazing.
I actually started off trading stocks, and let me show you. Let me go to my my trading view page. I'm gonna show you some stocks that I used to own, and some of the drawings that I drew up and how they did, right? This is back in 2019. These are some of my best picks right here. These three. So let's look at EPH, right? So when I drew this up, right, I was looking for it to come around at $6. I don't from what I remember, it didn't come back to $6, right? But let me show you. I bought in, we can see What was I saying? On the weekly and the daily, both of the lines are clean on EPNH, EMPH, and the following fib levels. Each of the moves have been measured moves. The first move from 139 to 763 was about 634 points, and the move retraced 38.2%. Became, and to begin the current move, that's talking about this move to this move back down to here. I didn't catch it here, but what I was expecting was we make this low and make a high around this $10 level, and then we retrace, right? You can see all of this stuff. My little comment, the markup was solid. And I'm gonna show you, I can't remember exactly where I bought around, but I'm gonna show you what ended up happening with this. We're gonna hit the play forward. I bought in around here. I just bought in around here. And look where this ran to. Look where this ran to. It maxed out at 227 from $10, right around $10. I actually got out way too early on this. I got out at like this second run up right here. I got out at around 60 something. It was a couple years back. Yeah, it was like 60 something. My other mentor who does stocks, he's still in it. He's still in it. And he added on around 70 something. And he's still, like, think about this. He added on at 70 something right here. Do you think he was concerned with the fact that it was $70 when he saw targets up here at 2 something? He still doubled his money.
Did he use Fibonacci, Corey?
He used my charts.
Oh, wow.
Yeah, he used this chart. He used this
Crazy.
chart. Yep. He used this same chart because he's not technical. He does all fundamental. I don't know what's wrong with him.
What is his name, Corey?
I can't tell you,
Darn.
but
Nice try, Naomi.
he's not on social media. I mean, he is, but if you saw him, like, you wouldn't, he don't be like on social media and doing all that crazy stuff. Okay. All right.
Boo boo, Coco.
Okay.
Boo boo.
Okay. This is another example. I think this one, this one I got in and it got stopped out. I was looking for an ABCD pattern, buy right here. I was looking for a buy right here, right? And this one,
Coco.
okay. This one didn't play out the same way.
Okay.
This one won't play out, so.
The lesson, Coco. The lesson.
Okay. That one won't play out. This one did pretty
Lesson,
good.
Coco. Lesson.
This one did pretty good.
Lesson,
won't play out
Coco.
either.
Lesson.
Okay.
Lesson, Coco.
All right, I can't even bring it up. But this is just like an example. You know, this one is the best one. This is the only one that will play out. But just to kind of show you, like, you know, you can take and make the same kind of advantage. I got out way too early, and some of the other stocks that I got in were similar results, you know. Let me see. Here we go. Here's some other one. This one was not one. That one didn't work out. This one I got in at D, and I didn't stay in this one long. I think I got stopped out somewhere when around 270 after it made this candle. So this was a good trade for a little while, but this one was one that didn't play out the same way. But I just wanted to show y'all this. I just wanted to show y'all this. What do I think of water stocks? Water stocks, I don't really have an opinion about it. I've never looked at water stocks. Yeah, I never really looked at water stocks. Energy stocks. Energy stocks, I don't necessarily have an opinion about those either. I think that I like to stick around. Okay. I like to stick around tech stocks and pharmaceuticals. I like those the most. I like farm companies. I like travel stocks right now. So one of the portfolios I'm building up right now, which I'll show y'all some insight on those. Yeah, I'll show you guys some insight on that, what I'm looking at right now. Pharmaceutical stocks. Yeah, not farm stocks, not like farm. I'm in the process of building an airline portfolio right now. My logic behind that is that as you know, as the world opens up, we're going to get more traveling. We're going to get more people moving around the earth. And that is one of the few industries that doesn't seem to be getting threatened right now with potential layoffs and stuff. They actually need more people in the industry right now. So everything you see on this board is something that I'm looking at and I already have purchased at one point. The Jet Index, this is like an index for the airline industry, is made up of 17 different airlines. And it's basically the accumulated price of those 17. And Delta is one of them. I can't remember all of them that are included, so don't have me lying. But let me see if it shows it here. Yeah, it doesn't show it, but this is the Jet Index, and you got to have a certain type of account to purchase this, and you can do the futures through AMP. You can also go through TD Ameritrade and get this too. The only thing that's threatening this is the fuel prices right now. So you might be getting a good time to get into the index if you wanted to, or get into the airline positions if you want to, because we probably about to see a little drop right now because of the oil prices or whatnot. But starting around the end of the year, going into these summer months, with travel picking up, we should get a bounce in this. So that's my logic for purchasing airline stocks. I got something some of all of these. My favorite one is Air France, and that's because it's the cheapest. I feel the same way about all of them, but this one is the cheapest right now. I initially bought in around 490 and then 459. I took some profit around 558, 556 and 548. And then I still have positions that are sitting in, and I'm okay with the fact that it's dropped down to
Wait, that's like $3 I'm looking at?
yeah, yeah.
Wow.
So now what I'm probably about to do is I'm probably about to get some while it's around this $3 price and just and add on again. And you can see my notes right here from before. I put in like, I don't remember what it was, but I think I put it in like 500 initially. And then over the course, I added on, and each order I put in was at 489, 458, 429, 395. I didn't put in these two, the third and the fourth. I didn't put them in because this drop right here, I didn't put them in. So when I saw this drop, I didn't put it in. I just let it drop. So now that it's around this $3 price, I'll probably add some soon. I don't know when yet, but while it's in the threes, I'll probably add some on to it then. So yeah, I thought we might hold here, which we tried to do a couple times, but we didn't, and we might take this low out. I'm okay with that. If it does, that means I get to buy it at $2 and some change, and I'm okay with that. So I just want to get in, and this one in particular, because it's Air France. Air France ain't going nowhere, right? And Air France is a staple company. You know, it ain't going nowhere. That's France leading airline. So we can forget about this going to zero, you know. And if we do the last 52-week high, we're looking at $12. If we go in at $2 or $3, getting to the 52-week high puts us, the 52-week high is $7. $6. Yeah, $6. And we get in at $2 or $3. The 52-week high gets us $6 a share. We would have 3x our price on that. If we get to the post-COVID high of $12, even if we go halfway, that puts us around $8. That's a 4x on our purchase. If we get to this, that's a 4x on the overall. So I'm okay with however it goes. I just want to be able to get in and get as much as I can. What is the least to purchase? You can buy one share if you want to at, that's kind of up to you. That's kind of up to you, Okay. Okay. Just give me a few minutes. I'm almost done, boo.
Okay.
Okay. That's one of my favorites just because of the price. As far as who I think is the most valued is Delta. So, but Delta's for somebody, it's $38 a share. So you can't like load up on them, but I can load up on Air France. And then you got United at $44, Spirit at $20. Can't touch Southwest. I don't even have any in Southwest yet because this was way too much for me. It's $900 a share, so I can't touch that right now. I haven't touched Air Canada, but I got Jet, Spirit, Delta, United, and Air France right now. I want to get Southwest at some point, and I want to get Air Canada. I just haven't done it yet. So that's
Questions.
yep.
Number one, do you have a specific goal for this portfolio? And then number two, do you have a specific exit for this portfolio? So when I say goal, is it's like, okay, well, this is gonna buy me investment property, this is gonna help me retire. And then the exit is like, do you already have your exits out? Like, okay, once I get to 50% return or 200% return, I'm good and I'm out.
I want to see. Well, of course, I want to hold these for like forever. To be honest,
Okay, long term.
that's the overall goal. But I want to take these at least till we get post pandemic, like fully out of pandemic, and we get back to normal traveling and all that kind of stuff. And then I also want to see how we hold them if we get into recessionary periods, if we go into any of that kind of stuff.
Okay.
But I mean, overall, like I want to get into Delta. I wanted to get into Delta forever. And to me, like the pandemic was like perfect time. And another thing, where's my other portfolio that I want to do and have started? I haven't started my biotech yet, but I'm working on it. I've been looking at a couple. I don't have the charts to put up on there, but I want to start a biotech one. But I have started the airlines, so. This was another one I was looking at. Latham, they're a South American airline. And again, I want to get in them because they're cheaply priced and I don't think they're going to go anywhere. Like the chart looked like trash, but I got to do a little more research on them, but I'm just bringing it up because of the price. And looking at the potential rate of return. So 52-week high is $3.05. Right now, current price is less than $1. It's 37 cents, right? So this is one of those investments, you just throw some money in there. If it go up, it go up. If it doesn't, you don't even think about it. You just put an alert at halfway, and if it goes up halfway, you just double your investment. So this is another airline company, Latham. They are mainly out of like Brazil, Argentina, Colombia, those areas, and it's one of their major carriers. So though the stock is beat down, this is also one of those stocks that I don't think is going to go anywhere. It's just taking a very big hit, and maybe they get purchased or bought out by somebody, but you would still own the share. So whatever, maybe put $100 or maybe put something in there. But even if you get $100 of these, $100 of shares right now for this particular stock, and it's at 37 cents. That means that if you do have those shares, you own 37 of those shares. So, I'm sorry, 37. put $100 in there. Yeah, you own like 37 shares. So you got a good piece to start with, you know. Got a pretty good piece to start with.
And Corey,
Yeah.
when you mean it's not, you don't think it's going anywhere, you mean you don't think it's going out of business.
Out of business. Yep.
Oh.
Yep. Set it and forget it. Yep. Set it and forget it, you know. And if it goes to, you know, you buy at 37 right now and it goes to what, you know, $1, you already 2x, you know, you already 2x, and you don't even have to feel no kind of way about that investment, you know. And you just go about your business. Brandy said, what are the 3 that I can purchase? Of the airline stocks, you know, it just depends on you. If you can do partial shares of any of them, or you can do the full shares, and you could just got to go through, you know, Robinhood, TD Ameritrade, like I said before. And let me see what else. What's the least to purchase? Like same thing. You can put in as much as you want to, Brandon. It's just kind of up to you. It's just kind of up to you. And like I said, if you don't feel comfortable initially, just piece it in, put in a little bit at a time. But yeah. So like I said earlier, I don't really have much on the indices today because it's just kind of in this range. I think it's in a 50-50 area where they could go up or down. I want to see how I open up on Monday after the Amazon news. And then as we go later into the week, Thursday, Friday area, Tuesday, consumer sentiment, trade balance are going to be the main thing. If we open up and we go up, I want us to target these equal highs and this imbalance that it left right here. And that's on SPX, that's on US 30, and that's on NAS 100. So let me just send this out. Not much to mention on it, but that's what I'm looking for. And this one is SPX.
Hey, Corey.
Yep.
Before you go, do you mind looking at Ontario Resources?
Ontario Resources, sure thing.
Thank you.
Can you send me the ticker, the symbol? AR.
That's it.
Okay. Why is it? It's time to sing it. All right, so that's all of those.
Pepper, no.
Ontario Resources.
No, no. No.
They are an energy company.
No.
Don't do that. Don't do that. Can I have a hug? Why not? Give me a hug.
The pig when you walk.
Okay.
No.
Okay.
What's that for?
All right. So one of the first things I like to look at when I'm don't mess with that, baby. Don't mess with that. TT gonna get you.
Titi?
Yeah. Can you draw me a house,
No,
please?
no,
Can you build me a house?
no,
Okay.
no.
Okay. All right. Like I said, one of the first things. Okay. One of the first things I look at is who owns this, right? And right now I'm seeing Vanguard Group. That's the first people that pop out to me. And BlackRock. Those are large hedge funds. So when I see if they own those, I'm already like, oh, okay, that might be somebody of interest, right? Then if we go down further, look who else? Goldman Sachs. I don't need to know nothing else. I know this is a decent company in itself. Now I need to see like, oh my God, right in the face. That's not funny. That's not funny.
No.
Right in the face. So I know that this company is one that's a good company, right? Then I want to say, where are we in reference to its 52-week high? And where are we in reference to its 52-week low? I can see on the chart, we already up for the year in the past 52 weeks. And I can see over here, my range is $10 to $46, right? We're more so along the highs, right? What's been the latest on this? Energy, Wall Street. This is interior gains, but lags in the market. This looks good, but I don't know if it's the right time because I want to see a dip. I want to see a dip. It needs to come down to like 32, 36 area for it even look interesting. 31, 25, 26, 20.
Oh,
So when it comes back down to those prices, that's when I should consider jumping in.
That's only time when I would. I need to see a retracement.
Okay.
I would need to see a retracement.
Because I originally started looking at it when it was $5.
Okay.
And then I kind of missed the run, but now it's all the way at $44. So
But like that go back to show you like what I told you before. You got to scale in. If when you buying stocks, you're not buying them like you day trading. You don't need the same precision. When you buying stocks, you're buying the value of the company and not so much I need it to be at a certain price. You know, you want to know, okay, am I within a decent price range? Yes or no? Okay. Where do I see it going from there? If I see it going to $10, $5 is okay. That's a 50% discount. You don't need to say, oh, well, it's at $5, but man, it could go all the way down to $3. Do you want to lose a $2 gain to make a $5 gain? Do you want to lose the opportunity to make the $5 gain because you saw $2 in downfall, right?
yeah.
So in this case, you let a $5 valuation at the time miss you out on, what is it, 44.96 right now? It was 46. You let yourself miss out on a $40 gain. That's a 8x.
Goodness gracious.
Right?
Right.
So if you felt like it's a good company, you see the value, you see the holders, you see all that stuff is good. You looking at the sectors that it's in. If this is an energy company, one of the few stocks sectors that is up is energy right now. So your whole sector is up right now. And you let probably $2 in drawdown scare you out of making 8 times your money. You see what I'm saying?
Okay, so I measure this the same way I would for forex pairs, right?
No, you
No.
don't treat this like forex. If you want to time entries, the only thing that when you're looking at stocks, right? You're looking at it, you looking at fib levels, you looking at all that stuff but you mainly want to see projections and exits. Your entry is going to have to be a different consideration. And that's why I mentioned earlier, and I showed you earlier, the scaling approach. That way, you don't think about it as I need to get in at a particular price. I need to get in a particular range of price. If it goes to in between, if it goes to in between $5 and $3, I'm gonna be okay with buying it, right? Here is another example. Here's another example. My little midget niece, she is like sitting right in my face right now. My little midget niece, man. Let me show you guys this. And I know Christine loved this one because I remember her trying to get this chart for me like 9 times. Let me find it and see if this one's it. I think this one's it. We did a long-term outlook on Bitcoin. And
That was my favorite ever.
I remember we did a long-term outlook on Bitcoin. And everybody was like, well, why everybody talking about it's gonna go to 60 and all these other numbers? And we mapped it out, right? We mapped it out. There's so much stuff on here. Okay. Can you draw me a picture?
No.
All right. You just want to beat on my chest? You just want to beat on me? Okay.
Yes.
Okay. All right. So I don't think this one's it.
You mean?
There we go. Okay. How y'all parents do it? I don't know how y'all doing it. Y'all
Cocoa melon.
superhero.
Cocoa melon.
She
Fine
don't pay
cocoa melon.
attention to it.
No.
Oh my
Cocoa melon.
You want to watch Cocoa Melon?
Yeah.
All right. Let's see if that
Boo-boo.
works.
Cocoa.
What does that come on? What does Cocoa Melon come on? Is it a Netflix show?
It could be,
Yeah.
but you can YouTube, yeah.
Is Netflix?
Yeah, Corey, it's Netflix.
Okay.
Don't do it, Corey. Don't do it.
Cross over into peace, Corey. Cross on over.
Keep interacting with her, man. There you go. Just keep interacting. That's the best.
Too late. All right. Okay. All right. All right. So our first projection when we'll retrace back, right? When we were first looking at this, we got our projection off of this low, this high. That gave us 38,000, right? Okay. Then we measure what we think the potential retrace would be from here to here, right? Yes. Yes.
Cookies.
You want cookies? Nope. No cookies. You want to go outside?
Yeah.
Okay, we're gonna go outside, okay? Okay. All right. All right. So a 30, the 38, 39 run right here, right? And we already got that, right? And this is in a bullish market. If when we saw this pushing up to this area, even if it gave us a retrace or not, we knew we had to come back to a zero. From our zero, we never got a retrace, right? So that means that we can measure from our high to low, right? Our high to low from our last impulse was right here. And right now, we already got our 618. We had our 618 touch right here from this high to this high. We came back pretty much 618 right here. And we made a new high and we pushed back down to 618 right here, where our 70% lines up with pretty much this 19,000 retrace. And so for me, if I'm looking at new targets to buy Bitcoin, I'm looking at this 21 to 19 range. As far as long term, I'm looking at these two areas to buy it, right? If we go deeper into this, I'm looking at my 786 level, that's 16,000 area to the 13,000 area. That's your last high. That's why you got to look for that area. Because if we come down to 786, you likely can expect some slippage. This is where your slippage would happen in, just like here. So this would be my buy range right here. My first buy range for a real buy, for a long-term buy. And I'm not talking about just jumping in and scalping. I'm talking about long-term buys. And I treat Bitcoin the same way I would a stock. I don't care what it does on a regular basis. I only look at it for its long-term potential. I don't focus on what it does on a day-to-day basis because I don't really know the crypto market and I don't care to know the crypto market. But what I do know is I can make money off of it. So we kind of miss this opportunity, but that's all right. So I want to see we come from where it is right now down into these two ranges right here. And push up from here. One of these areas, right? Put this in blue. The significance in this particular area right here is we already have information that a large group of buyers have a big stake at 21. We already know that. So our 21 to 19 range, we take the same logic. We do a scale in position here. We do a scale in position here. And if we get an opportunity to buy, we can do the fibs this way off this low. A 50% retracement gives us 47. If we just looking at this swing right here to here, and we come all the way down to here, let's go and let's say we come to 70. 50% put us back at 35. So if we can get a bounce in this area and we projecting from this high to the 70% of the overall move, we get a 50% right around 35 flat. And what adds on to confirmation on this is, let me show you. We have a gap in price right around here, from here to here on the weekly. So that actually gives us some extra confirmation that this could be the setup that they're looking for. Let me get rid of this. And let me mark this out. That's our gap high. It's our gap low right there. So if we come up to, for sure, if we drop down to this low, we can project a high at roughly around this area, right around 35. That's also 50% of this imbalance. And it's 50% of the move if we come down to this area from this high to this high to this area. So our long-term move on Bitcoin is this high. To this low. This is the range we're working in. Our short-term high and low are this high to this current low right here. And for the long-term move, our 70% puts us right here for a 70% retracement. If we get the 70% retracement for a short-term period, we can look at this high to the low that we make inside or near the 70%. And that's where this buy coming from right here. And then if we get that, we can expect to come back to this range of imbalance right here. From that, if we get this low right here, we can measure from this high down to our 70%, 78% from here. And that's when we can come into here. And or we can look at, for a shorter term position, this high to now that low at 78. So for me, I'm gonna let this drop, and or I'm gonna take sales until I get to 21 to 19. I'm only thinking about it. If it wants to, it could buy off of the 618 like it's trying to right now, but I would need to see a confirmation move before I took that, because I think it can still go down to 70.
Corey, I think you already answered the question, but I need to ask anyway. Would you say it's safe to say that when Bitcoin Bitcoin drops, that means that the US dollar goes up, or do you even make that correlation at all?
I don't make that correlation.
Okay, all right.
My correlating pairs are dollar to GU, dollar to EU, dollar goes up, EU, GU go down.
Okay, okay,
Dollar goes down, EU, GU go up.
okay. Okay.
The other pairs that I like to look at, UCAD and U-Swiss, dollar go up, UCAD, U-Swiss go up. Dollar go down, UCAD, U-Swiss go down.
Hey, Corey, can you share this Bitcoin chart with me in a minute?
Yep.
Appreciate it.
Um, like you can still sell this, but for me, I'm more so just looking at long term. I'm not touching it until it come down to my long term 70% or until my 618, which it already has 70 or 786. And that's when I'm looking at it. I'm probably not even looking at it at 618, but if you are interested, it's at the overall 618 right now. And you can look to buy. As long as we below 50%, which is this 34, you can start looking to buy. But it's too early for me to buy. I haven't heard anything that changed the fact that it still got room to drop. Nothing at all. And yeah, that's about it, man. I don't think I got nothing else.
Hey, Corey, I got a quick question.
Yeah.
So Bitcoin, similar to stock, you cost value average in, and say you were to do it now, and of course it drops, and you have like a negative. As long as you don't, as long as you still have it, even though it may drop, say to a negative, drop all the way to, let's just say 13 if you bought it now, right? When it started going back up, are you still in ownership of that Bitcoin, just like we stock? Okay.
Uh-huh.
I wanted to make sure.
Yeah, you still own it. It's just not
It's
worth
value.
what you got it at.
Right. Okay.
And it's not going to be a negative number. It's just going to be a lot smaller than what you got it at. Like I think that like, let me see, like I still got some Ripple left in a long-term position, and I sold it off. I bought in late on it around 60 some dollars, 60 some dollars that I still had left, and it's only worth like $30, right? But it ain't gonna go to zero unless Ripple go to zero. I don't think it's gonna go to zero. But
so you bought in at Bitcoin now and it just went, say, to 13.
yeah,
That's not gonna have
let's say you bought $100 worth right now and it went down to 13. That $100 you bought is gonna be worth probably 29. So it's gonna probably be worth like $40 now. Your account will be at $40.
Okay.
Like you still have the same number of Bitcoin, but it's only gonna be worth $40.
Gotcha.
And but if it goes back up, now while it's only worth $40, now you got the opportunity to buy some more and cost average into it,
Right. Yeah, that's the benefit of the investing side, dollar cost, as opposed to trading it.
Yeah. Yep. So
Cool.
let me get you guys this video. It's gonna be the baby field video. I ain't even gonna post this one in the group. I'm just gonna give it to you guys on the call because it's got the baby in the background, got Coco Melon in the background.
You can't even hear Coco Melon.
I can. All right. Okay. You guys have a good evening.